from, and thank you for remaining with us. This is Smart 24 TV, where we drive your business. My name is Anthony Sebali, and I'm here, of course, to take you through the financial markets. You can follow this show every weekday, Monday to Friday, and we are always here to give you updates on what's happening currently in the financial markets world, here in Uganda, in Tanzania, in Kenya, in East Africa basically, but as well as the global markets as well. And of course, you can catch also the show on our YouTube live stream, that is at Smart 24 TV Live. You can also catch it on you can also catch it on GoTV channel 394. That is our channel there on GoTV as well. And you can interact with us via our different social media platforms, including Twitter. You can leave a comment there, a question, a concern that you may have at Smart24. That's our handle as well. And my personal handle is Anthony Sebali. And welcome to the program. And of course, we look at financial markets here broadly into, of course, when we look at the debt markets, we look into the lending of governments, we look into the lending of corporate bodies that are listed on the Uganda Securities Exchange. We look at the stock market in detail in particular as well, and we analyze how the markets have been able to perform the past 24 hours. And in this particular show, we are intending to provide financial literacy, provide information and understanding of the markets as well. If it's your first time here, I'm very glad you're joining us. And of course, get ready to learn more and get ready to be able to get involved actively in these markets. If you're hearing the markets for the first time, basically, we are talking about the debt markets, equity markets, the derivatives markets, and the commodities markets. That's all we're talking about here on the financial markets. And on the show, we always have several visitors, several guests who come and talk about several topics. We deal with, for example, the Uganda Securities Exchange, the exchange mandated by the government of Uganda to trade securities on behalf of companies, to trade securities on behalf of government, and to be able to give us these data that we use here on the program to update you as well on information regarding the markets as well. And so when you look at the stock market, you have capital seeking companies coming to the public for capital. This is basically what we have. If you have a business and you would want to expand, you would want to grow that business, you have a chance to get capital from the exchange simply by listing your company, people buying into your company. And we've had several people here on the show talk about how this is done. The company issues what we call the prospectus. This prospectus includes the shares, it includes the number of shares, the amount that, of course, the company is looking at getting from the public. It's looking at also the governance of the company, looking at the top directors and all those people, the books of account for the company, at least for the last 3 years, should also be included in this prospectus. And this prospectus, of course, is scrutinized by the exchange. And when this prospectus passes the scrutiny of the Uganda Securities Exchange, the company is able to come onto the market for the first time. In other words, a company like MTN, which was a private company owned by individuals or owned by a particular organization, in this case, the MTN Group, comes onto the exchange for the first time. And this is called the primary market, or the initial public offer. And following the initial public offer, we find that the company is able to get capital for the first time, given the listed amount of shares, given the people that are interested in buying the shares. And when this happens, definitely the company is the one trading on the stock market. It's the company that is getting capital from directly from investors, and there's a fixed starting price where you're starting to trade these securities or these shares on the stock market. Now, when this happens for the first time, of course, the company is able to evaluate itself and find maybe some shares have not been bought and are taken back into the company, and sometimes all the shares are bought. And of course, the company could decide to list more if it is within the requirements, if it is within actually the standards for the Uganda Securities Exchange. But of course, all this is done under the jurisdiction of the Capital Markets Authority. This is the body that is mandated to regulate the capital market space. Just like the name goes, capital markets, people seeking capital, people seeking money, and these two parties are able to meet at the exchange and able to exchange interests. That is, the companies get their capital, and then the individuals are able to get shares and become part owners of these companies, as of course you see in the initial public offer. Now, immediately after the initial public offer, that is a specific period of time after the company has of course gone public, these companies usually get into what we call the secondary market. And on the secondary market, you're looking at companies listing for, of course, the company's shares have been bought already by the first shareholders, but now they are listed by, of course, the exchange, and the exchange trades these shares through the stockbrokers, and these stockbrokers are what actually mediate between the shareholders from the public and the exchange. And these stockbrokers are very key players. Currently in the Ugandan rules set by the Capital Markets Authority Act, you cannot buy shares without going through a stockbroker. So these stockbrokers are intermediaries that help people from the public be able to access shares, either on the first time the company is issuing shares, that is on the IPO, or on the secondary market, where we're looking at now people who have already bought on the first market are trying to trade shares on the secondary market. Just like the word goes, secondary, we are looking at the second time now shares are being sold. And of course, these prices change because at the IPO we have a fixed price. The company has got a certain portion of the company's capital and says we need to raise this amount, maybe 20% of the present working capital, maybe 20% of the present assets that we have as a company. And so that 20% could be 1 trillion shillings, it could be 2 trillion. And we saw that for MTN, we had over 4 trillion Ugandan shillings that were listed, worth of shares that were listed on the exchange. And all these were bought out by several people at a price of 200 shillings. Now, when this happens, after this first time, the prices from there on are determined by the demand and supply of that particular stock. And this is exactly why we come here every morning and monitor the stock market performance, because different days have different market activity, different days have different people buying and selling, and different days have different closing prices for different stocks, depending on one, the demand and supply. That is one and the main factor that determines the pricing. And many people here have been able to emphasize on the show how important it is to understand as a shareholder how prices change. Because, for example, people who bought the MTN stock, they're saying, how come I bought at 200 shillings and I have to sell at 185? I have to sell at 187. Like today we are going to see MTN gained by 187. How come that is the case? Well, on the secondary market, it works entirely like on any other common market. You have prices determined by the demand and supply. If you take a look, for example, at the MTN stock, it has never got back to the 200 mark since listing on the exchange. But it has gone to as low as 160 and come back to as high as 189, 185. And that's where we're seeing it at the moment. And this shows you how powerful the forces of demand and supply could get. and you look at this particular stock and say, how are people going to benefit from this? Well, besides those who bought during the IPO, there are people who are actually selling, because they saw the prices going down, and people panic sold, like we call it in the markets, panic selling. And this is a very bad thing, because you who is selling, yes, you're going to get some money, but it's going to be less than the money you are actually able to invest. So you've made a loss. But on the other hand, the people who are going to buy these stocks when they're going down, they're going to benefit, because in the long run, we might expect these stocks to go up. And when these stocks go up, you're going to see a very big difference between your value and their value. So every business that everyone sets up is looking at value addition. If you're making juice somewhere, you want to add value by maybe adding sugar, maybe adding flavors, maybe adding a little bit of something. Everyone is looking to value addition, and that's what the stock market as well looks at. If you're not getting any value from buying stocks, there's no point. So the markets, of course, require several. That's why we repeat this, and we try to get the information out there, because as an investor, you must have knowledge. You must know exactly how these markets work for you to be able to invest in them, and know how to what to expect as an investor and what to expect as an individual investing in a certain company, or an investment club, or a family, or any kind of category of people that are investing. You must first get educated. It's like starting a business of maybe clothing, and you have no idea how to tailor clothes, you have no idea how clothes are marketed. You're going to lose out on the business. So financial markets is a business, and it needs knowledge. You need knowledge, and you need to grow in your knowledge. Today, if you know something, you'll have to learn something new tomorrow. And people in this space keep learning. That's what keeps the markets going. Stockbrokers, the Capital Markets Authority, people like Alltex East Africa, coming up with very new innovations, because they keep learning from, first of all, the market. They keep learning from their clients, they keep learning from investors, they keep learning from the companies that are listed, and that is exactly what drives the growth in these particular companies and in this particular sector of the financial markets. It's a regulated space, unlike other, for example, ventures like cryptocurrency, which are unregulated entirely. They entirely depend on certain whims of maybe, for example, Elon Musk, who can tweet something, and before you know it, Bitcoin has lost value. Before you know it, it has gained a huge amount of value. So they don't work like that. They depend entirely on the demand and supply, but also they are regulated. You don't find people that are not licensed, for example, being able to trade on behalf of their clients. You don't find people who are not licensed being able to buy securities. So this is an entirely regulated space, and it's something that we are looking at as the Ugandan economy as one of the performance indicators for our economy, and also one of the growth factors that's going to enable our economy as well to grow and develop. Because looking at economies like United States of America, like recently we saw in July, they had one of the best months on the stock market since 2020. That is during the pandemic inception, when the pandemic had just hit, and this actually shifted the economy very significantly, because we were in, of course, the recession was very much in sight. Many people, many investors, many ardent, rich and wealthy men, and many other prominent politicians around the world had predicted that there would actually be a recession. But we're seeing that that could have been reversed due to the good performance of the stock markets, because you cannot become a multi-billion company, a multi-trillion company in the United States without listing on the, for example, let me just say the New York Stock Exchange. It's impossible. You have to list, because top 500 companies, they're under the S&P features. You look at Dow Jones features for the industrial sector. You look at all these other features like S&P, they give companies opportunity to be able to raise capital and also to give public a say in these companies, because that way, when these companies are growing and making huge amounts of profit, they're benefiting the public as well, not just the individuals that are seated in their offices making these things happen. And that's exactly how the economy can be sustainable. If we also here in Uganda try to diversify the nature of our markets, the nature of our investments, away from the land, away from agriculture, which is the backbone of the country, yes, very good. But what else can make us money? What else can sustain our companies here in Uganda? What can sustain the government? What can prevent the government, from wallowing in debt, in foreign debt? No wonder. Because we are seeing recently that government is actually trying to run away from these foreign loans because they are quite expensive to pay back. They have very high interest rates, and they come with a lot of conditions. How about we borrow domestically? And that's exactly what financial markets provide. Because when we look at the debt instruments, the treasury bonds and bills, simply loans to government. We are lending to government, and government gives us back this money with an interest that comes in periodically. You look at a treasury bond returning interest every after 6 months. All these are just to help you and me be able to add value to ourselves and also add value to our money. Talking about the money a little bit, money loses value whenever it's not invested. Every time you keep money without it making more money, that money is losing value. What do I mean? If you have 100,000 today, you keep it in a box, you don't use it at all, you don't invest it, you don't buy anything, you keep that money for the next 10 years. That money will come out when it can no longer purchase what it would purchase. But if you get that money, 100,000, put it in a bill, put it in a bond, a 10-year bond, 10 years from now, you have your 100,000 back. But every after 6 months, you're going to be getting a certain interest on that money. And probably by the time, if we can't just add up the interest accumulated within the 10 years and add to the 100,000, you have more value. Even if at the money has lost value, still your money has more value because you've added a little more money to it. And this is exactly what we all are looking for when we come to an investment such as in the financial markets. Just a preamble that I was giving, and of course we're going to get into the market performance here. You can always check out Uganda Securities Exchange, that is by dialing *165 hash to be able to open yourself an SCD account. This SCD account, yesterday we talked a little more about it in detail with the stockbrokers here, but it is simply an account where you want to keep shares, where you want to keep securities, not just your shares. And so opening it has been made easy since the MTN IPO. In partnership with MTN, USE has been able to introduce the USSD code *165 *65 hash. This USSD code will help you access the Uganda Securities Exchange. It will help you get, of course, your identification details, including your NIN number, including your personal number, your passport number if you're truly a foreigner. And these will be entered into the databases of the Uganda Securities Exchange. And because, of course, your personal identification number definitely is your national identification number is tagged to your details in the national ID. Your details will be captured and an account will be opened up for you. After opening the account, all you need is a stockbroker. The stockbroker can be approached either through phone, you can call them, you can visit their website, you can send them an email, and you can do so many things. You can go to their offices physically, yes, if you want to. And there are 4 stockbrokers currently. You don't have to count very many. We have Standard Bank Group, that is a subsidiary of Stanbic Uganda Holdings. And we also have Crested Capital. We also have Dyer and Blair Investments. And then we have UAP Old Mutual. Very few and very easy to approach. They'll give you not only of course, but when we return, we're returning